Jacob Roth here on the Rural Radio Network, and it is time for the weekly commodity update as we're talking with Darrell Holaday of Country Futures in Frankfort, Kansas. Short trade week due to the holiday week. What did you see across the week this week, Darrell?
Hey, well, with lower to sharply lower on the week for the grain sector. We started the week with rain in Argentina over the weekend, and about 60% of the belt got anywhere from 3/4 to 2 1/4 inch rain, so really good rains. And the surprising part is in the early stages we saw a lot more pressure in the corn and wheat markets. And I think the reason for that is that we just continue to see those markets struggle with any type of export business out of the U.S., continue to see aggressive pricing by Russia in the wheat and Ukraine in the corn. On the other hand, the soybeans were a little slower to get pressured, and they did see kind of had a low on Thursday and recovered on Friday, so limited the losses to some extent on the soybeans. And that primarily because, yes, there was the good rain last weekend. It turned hot and dry this week in almost the entire area with very little rain. And really it's going to stay that way until next Tuesday to Wednesday, and we see a weather change going there. That's pretty well been agreed upon the models and really hasn't changed much. Where the disagreement is, and where we've seen back and forth both in the EU model and the GFS models, is how much rain we do get, how in the following week or 5 to 7 days. The EU model has been the wetter model, but turned a little drier for that time period late this week, and that supported the beans on Friday. And on the other hand, the GFS model kind of went a little bit wetter than the EU model. Again, we'll see how that develops. That'll probably make our next move. Worth noting that we're also having a difficult time getting above the $14.90 to $15 area on the spot bean side of things because, and even as you look forward, even if the Argentine crop's under pressure, the early yield numbers coming out of Brazil are really, really good. And they got a long way to go, but you just can't argue that they certainly are headed towards a record crop. The question is how big that record will be. So even if that crop in Argentina is below 40 million tons, really question how much potential soybeans have above $15. There's going to be a lot offered by Brazil on the market here in the next, starting really anytime in the next 2 to 3 weeks, but specific in the next 30 to 60 days. We also saw pressure in the energy sector, which is also a pressuring influence. And it certainly pressured the corn market, pressured the soybean oil at times, and pressured the soybean complex. Again, the big concern is, from the energy side, is we're seeing also a weakness in the overall ethanol production and use. No, that's just tied right directly with the unleaded gasoline. It's kind of an indication of the overall slowness in the economy. The real concern, we are below a year ago in a lot of cases, but in some cases we are below, on a weekly basis, we're below 2 years ago, which would put us right in the middle of the COVID situation. So that was certainly a negative factor. We continue to see that energy market move lower in the week. Some bounce off the lows as we came to the end of the week. The USDA will be out with their final U.S. production numbers next Thursday. They'll give us the final acreages and yields for corn and soybeans, all the spring plant, all crops, everything. It is the final 2022 numbers for the NASS group. And then we'll also see, of course, WASDE will update their supply demand, and NASS will also give us a December 1 stocks number, which a lot of that will be determined on if they make any adjustments in the production. So generally, the January report will cause a reaction because there could usually be surprises that they can make adjustments in the acreage. They certainly make adjustments in the yields. I think on the supply-demand side, the other concern is you're just going to have to lower. USDA has got to make another move lower in the export projection for U.S. corn in the current crop year, and they may have to lower. They need to probably lower the ethanol. They might wait a month, but they probably need to. They will probably eventually do that. On the week, March corn down 24 cents, 6.54. New crop December 5.91.20 lower. January beans down 17 on the week at 15.02, well off the low of the week. November soybeans 13.97 down 20. March Kansas City wheat 55 lower at 8.32. New crop July 8.24 down 52. So again, the corn and wheat exports are real concern, and it was kind of accentuated by the weekly export sales report that came out on Friday with corn number just about 321,000 tons, and the wheat number just 47,000 tons. Those are very slow numbers for a week. February crude oil down 6.49 on the week, closing at 73.77. On the livestock side, we saw lower trade in livestock futures. Most of that weakness in the cattle came basically on Friday. We had a weak cash hog index and hog futures throughout the week. But you got to remember, go back a couple of weeks ago, we talked about the fact that funds were piling into these February hogs during the really cold weather and the snow in the Midwest and the plains. And even though we were backing up hogs, and even though they were buying hog futures $9 to $10 above where the cash index was, and that was a dangerous situation. And sure enough, they've had to liquidate, and they've liquidated hard and had to get out. And I think we may have washed them out on Friday to some extent. We now have the February futures down near the cash index anyway, which is dipped back below 79, down near $78. The pork product continues to be weak. The beef product was pretty strong early in the week, but did fade as the week has gone on. And normally we would see weakness in both the beef and the pork on the wholesale basis over the next couple of weeks, and we anticipate that to occur. Cash cattle, on the other hand, were generally steady on the week. A weak tone late in the week as some Nebraska cattle traded on Friday, definitely $1 lower than last week at 157. So you have to call the cash tones steady, but a weak tone late. But you'll find mixed ideas as we go into next week. Most anticipation in our end is that we'll see just a little bit weaker cash trade as we go through the next couple of weeks. We are seeing some lower weights come in on the cattle side of things. Once again, that the carryover from the cold temperatures and the snow that we've seen in the north. I think the northern area weights have come down, and we'll see some rebound in the next couple of weeks. But we definitely have seen the latest data shows the steer weight's about 5 pounds below year ago levels. On the week, February cattle 156.77, down $1.12. April cattle also down $1.12 at 160.67. January feeders down $1.82.70. March feeders down 57, closing at 185.65. February hogs 80.27, down 7.42 on the week, and that April contract 89.65, 5.65 lower on the week.
And that was Darrell Holaday recapping the first week of trade in 2023. He's with Country Futures of Frankfort, Kansas. I'm Jacob Roth, and you are listening to the Rural Radio Network.